Logan Connors. Let's go ahead and kind of let Logan come in. I know a lot of you have chatted in and asked questions. I'm going to stay on chat and actually answer them, and we'll do more questions in the Q&A portion of the Trader Summit, which will be right after Logan, and then Don Fishback is our last presenter today. Logan is one of, Logan used to be one of our sales guys, and the biggest thing I can credit Logan for is actually talking me into trading options, which has been pretty amazing for my trading just by itself. But Logan's a great guy. He's doing a lot of trading. He can probably fill you in a little bit more on the details. I don't want to misquote it, but he's a great presenter. He's done, with MetaStock XIV, you get his LCI systems included for free. And I wanted to bring him in here to do some training with us on how those work. So Logan, let's go ahead and get the transition over to you. And I'm going to make the presenter you right now.
Okay, awesome. Well, we'll just go ahead and dig right in. Now, we don't have a lot of time, obviously, as Jeff has mentioned. We're running a little bit late, but what I've done for all of you that have joined us is I created a section on my website that is specific to your questions. Now, I'm not going to get a lot of time to answer any questions today, as there's a lot to cover and there's really a lot to go over. So while I'm introducing myself, giving you some background if you're not familiar with what I do, here's a link that you can go to, jot your questions down as we go through the presentation, and then what I will do is this next week we'll create a video that goes over all of those specific questions. So make sure you write them down, go to that link, and I'll make sure that you get that recording over the next week and make sure that all of your questions are answered. Like Jeff mentioned before, I did used to work at MetaStock. It was one of the greatest experiences that I could have hoped for, and really what got me excited about the markets. And started in support, moved over into sales, worked very closely with Jeff, and really just immersed myself within the markets. And what I came to find is that the markets moved in horizontal patterns, so I want to echo a lot of what Mr. Seville was saying earlier about that. We'll kind of get into the systems. But what do I do now? So I took all of my trading experience and what I learned, and I now am a full-time trader. I use the LCI system to manage several portfolios as well as a larger fund that we're working on to ultimately be successful in the markets. These are the tools that I use, and they are included for free every time someone is subscribed to MetaStock XIV. So you're going to get access to all of the information that is available. Okay, now I'm going to copy this link into the chat just so you guys have that as well. Okay, so let's just go ahead and dig into the system. Now, again, in MetaStock XIV, what is the LCI system? Now, the LCI system looks at support and resistance. Okay? In all of my trading, I found that the markets move in horizontal levels. Okay? So if you look at price over the relation of time, a single price point, it's a horizontal line. Okay? It doesn't change. It doesn't move in a diagonal movement. It is simply a horizontal price plot on the chart. Okay? And that's what's recognized within computers. I also do a lot of automated structures as well now, and I can tell you that the systems, the computers, when you're looking at this, they're analyzing these singular points, and over a time perspective, it's a horizontal point in nature. Now, the LCI system works in any market. Okay, so to answer questions I know which is coming through, it's going to work in Europe, it's going to work in Australia, it's going to work in the US, because the concepts themselves are going to apply across all markets, whether it's stocks, futures, Forex, it's not going to matter. I'm going to go ahead and I'm going to bring up an example of the Dow. And in MetaStock, you've got these pre-built templates. Now, you've got the LCI SR main, you've got the zones, and you've got the Fibonacci. Okay. Now, I also created some brighter color templates that are going to be easier for you to see during this presentation. So I'm going to open up the LCI main just to start, just so you guys get a sense. Now, first impressions, when you're looking at this chart, it looks extremely busy. Okay? It looks like there's a lot going on and it looks very complicated, but in actuality, it's not. Okay? Now let me explain. In support and resistance analysis, the most difficult aspect of being able to identify these levels has always been, where do I draw them? Where are these actually created? You'll see systems, you'll see strategies that might be based support and resistance off of some sort of other indicator. Okay, the appropriate way to draw support and resistance is going to be based off of price. Okay, now unfortunately, a lot of individuals and a lot of traders, they draw these levels based off of highs or lows, okay, in the market. What I found in all of my studies and all of my experience is that these levels are based off of the closing price. Your closing price is what is your consolidation, what the time frame, what the score is at the end of the ball game at that particular time. So if we're looking at a daily chart, which is the most influential as far as support and resistance, that closing price is the ending score. And that's where our support and or our resistance level is going to start. Okay. Now, a lot of other analysts, they draw based off of highs and lows. The problem with drawing based off of a high or low point is a lot of times highs and lows can be a reflect of emotional activity, a reflection of emotional activity. So are you really drawing your support and resistance at an appropriate level, or are you drawing something that was just an emotion of that particular time, and is price actually going to hit that particular point again? So I'm going to go through and we'll show you these examples. Now, going back to our chart on the LCI main, again, it looks busy, but let me break it down for you. Okay, the bright green that you see is our support. Okay, they're just simple support levels, and those are our major support levels. So that's what our signals for the LCI expert within MetaStock are going to be based off of. So when we're getting these particular buy signals or sell signals within our chart, that is what is indicating how price is reacting at that particular point. And we've got an indicator that will help us identify that, and we'll get to that here in a moment. The solid red, okay, the solid bright red is our resistance levels. Okay? So it's indicating where price is going to meet resistance. Our dotted lines, we can look at our more recent price movement. These dotted lines are our minor support and our minor resistance points. Okay? Now, why do we have minor support and minor resistance? It's extremely important to understand that a major support level is going to come about from a minor support level. Okay? So as we are building these patterns, as these motions or movements in the market are developing, these minor levels will then become our support levels, so we can see the underlying development of the market. It gives us a chance to understand where there's support. So right now, we can clearly see that at about 1765-ish, okay, 1770, we can see that we've got that developing support. So it's important to identify where those are, and that's what the minors help us to understand. Now, what do we have at the top of our chart? Now, if you've heard me present before, I always go on about how there are 3 different types of data points that you can analyze in your chart when it comes to technical analysis. Okay? There is price, there's volume, and there's time. Okay? Now, you'll hear others say, oh, then you've got momentum, you've got trend. Well, what is momentum and trend based off of? It's based off of price. Okay? So when you start analyzing those particular ideas or indicators or strategies within the market, you're really looking at a derivative of price or an explanation of price. So if we break everything down into its core simplistic value, we want to analyze price, we want to analyze volume in relation to time. Okay? Now, as we look at a relationship of time, that's when we utilize the Williams %R. Now, this looks slightly different than what you might be used to, but all it is it's a Williams %R that's been adjusted and adapted to rotate around a 0 point. So it makes it easier to analyze and to read rather than going from 0 to -100. Okay, so it gives you a better picture. And then you've got what I consider to be the overbought and oversold conditions. Now, this is looking at a 10 period. Now, why do I select a 10 period? Because in my analysis, when it came to defining our minor pivots, now again, our minor pivots are our building blocks of our major support and resistance, okay? They happen typically within a range of about 10 bars, give or take. Okay, so by analyzing what the closing price is doing in relation to those building blocks of our minor points, okay, and over a time frame of 10 periods, then we can get the idea and the picture and the understanding of where our particular reversal points are going to happen, or give us an idea of that time perspective. Now, we don't have a crystal ball. You know, there's no crystal ball indicator. If you guys have it, you know, please send me an email in your questions box. Tell me you've got a crystal ball and let me know. But it gives us a perspective. It gives us a benchmark of what we're looking for. Now, at the bottom of our chart, we've got our volume. Now, I am a big, firm believer in identifying volume and what volume can tell us as far as the interest level of the particular support and resistance levels that you're seeing. Okay, so the LCI volume kind of breaks into two parts, and then one part then breaks into four parts. But let me explain. So you've got the volume bands. Now let me expand this up. Now the volume bands indicate a couple key aspects. Okay, the center line is indicating what our average volume is. Okay, so we're identifying what is our volume average, so to speak, and then what is our volume doing in relation to that average. Our top line indicates our volume expansion level. Okay, so our expansion says, hey, there's a lot of volume that's happening. It can indicate professional buying and selling, which can be your smart money, where the volume's coming in. It can indicate a particular news event. It's basically saying if you get volume up above this level, there's something going on. Whether it's price is really holding to a particular level, the CEO just got caught in a fraud situation, whatever that may be, that's our first signal indication. Now, to the opposite side, we've got our exhaustion level. Okay. Now, when price gets to, or not price, excuse me, when volume gets to our exhausted point, which is below this particular lower band, that indicates that there is no demand. Okay. There's no demand in the current trade, and you will typically see these exhaustion points at the top of price movements. Okay. So if we expand this back out and we look at this latest exhaustion, okay, we can see right here where our volume dipped way below our lower band for several days, and what happened? Okay, so we at this particular point in time in December, we were retesting an all-time market high. We break through the all-time market high, but then did we have any demand to push prices higher? No, we didn't. Okay, so we see the volume below in that exhaustion point, and we see the market then begin to dip. And then as the market begins to flatline and go down, then we can see more volume coming in as we get selling kicking into place. Okay. Now, because we're moving quickly, let's take a look at some of the other templates that are being utilized. So this is the main template. Now, also let me quickly identify what these blue dots are. Now, these blue dots is an adaptive trailing stop. Now, in what I found in my own trading, exiting a trade is always the hardest thing to do. Entering a trade is easy. You're excited, you're ready to go, you're pumped up, you want to get your money into the market. Exiting is where those human emotions really start to kick in. It's really where you start to run into some trouble. And are you going to have a fear of it dropping? Is your greed emotion going to kick in? No, it's going to continue higher. It's going to continue higher. It's going to continue higher, right? So that's where these emotions kick in. So what the stop does is it analyzes and it says, okay, what is market volatility doing? Okay. Am I experiencing some good movement, and do I have a higher probability that price is going to come back against me? If not, you're going to see the standard trailing stop displayed, which is our solid blue level. Now, as we get a shift in volatility or a shift in momentum, which again, remember, momentum is derivative of price. So as price movements are shifting, okay, do we have a higher probability that price will come back down? And you can see that as the market really starts the flat line, you can see we get the lighter blue, which kicks in, which is basically saying, hey, you need to tighten your stop up because you've got a higher probability that the market's going to turn. And you can see that we hit our stop at this particular point before we get this first major downturn of this pullback within the market. So the stop is an adaptive stop that's always analyzing what our volume is doing, it's analyzing what our cycle is doing within the Williams %R, and it's analyzing what our price movements are doing to make sure that if we need to be tight on a particular stop, that it tightens up for us so that we know where we need to place our stop. But it's still going to give us enough room where it's not too tight where that we can analyze our particular trade. So we can see here, again, at this particular point, we can see we got a nice hike up of the trailing stop, and that's where it pulled us out. Okay? So again, it's a very, very effective way to be able to analyze where you should be getting out. Now, let's look at the Fibonacci template. So this is automatic support and resistance. Now, a couple questions I do get is why do you analyze 4 levels of each? Okay, because the market, what I found, moves in a sequence of 4. Now, you have some of your major price patterns, you know, your double tops, your triple tops, okay, head and shoulders. In order for those particular patterns to occur, which they do, and they do have a lot of validity to them, okay, your triangle patterns, whatever that may be, takes usually anywhere from 2 to 4 pivot structures in order to form that particular pattern. So as I did all my analysis and as I pulled everything together to help me in my trading, I found that the market moved as far as these peaks and troughs in a sequence of 4. Okay? In a sequence of 4. So let's look at the Fibonacci template. So by doing that in MetaStock, we can right-click, go to Apply Template. And I know we're running short on time, but we'll go to Fibonacci Bright. Now this is plotting my automatic Fibonacci retracement values. Okay. Now it's plotting 2 different versions. We're looking at yellow, which is our minor. Okay, so that's showing our minor retracement values where we're going to see prices kind of bouncing around on a shorter term perspective. And we've got our purple levels or our pink levels, which you see here, which is indicating our major Fibonacci retracement. Now, the major Fibonacci retracement values is what we are concerned with most. So why, if we're analyzing our major Fibonacci retracement and those are our most important price points, why do we have a minor? Again, we want to see where those developing levels are within a market, and we want to see how the underlying, okay, so our intraday traders, our short-term traders, what levels are they analyzing that are lining up with our larger perspective? So we actually can go in and we can break down it. Just quickly, let's look at if we look at our major level, which was 1765. If I break this down to, say, an hourly time frame, okay, we can see where our majors are coming in. So we can see that those are going to be a relatively, the yellow on a larger time frame is going to be what our purple is on a smaller time frame. So let's go back to our dailies. Now, the way that we can look at and see if these levels are holding dear or, you know, lining up, so to speak, if we look at this particular level here, so our 1775 between our 1780, what do we see? We see our first value of our major Fibonacci structure, but we also have a supporting level on our minor. Okay, now these particular levels are drawn from completely different peaks, completely different areas. Okay, and as they come together, that adds confirmation that we're going to see potential reversals or an interest in buying at that particular point. And you can see over this sideways market, where has price held? Price is held right at that level, multiple times. Okay, and on the flip side, we can see where it's holding within our short-term range. Now, what do we see at the top? Okay, now the LCI system takes all of this and combines it together automatically for you in your signals. So you've got your long-term signals, you've got your bounce signals, and then it analyzes the volume. It takes into consideration your Fibonacci, looks at cycle movements, okay, combines candlestick price patterns. So earlier today, we learned about our bullish engulfing patterns, which are so important. The LCI takes into consideration your bullish engulfing. It also looks at hammers, dojis, and what I call a top hat pattern. Okay, so it already is analyzing that candlestick probability or that price action probability, and it's applying it into what we call the LCI scoring system. Now, the scoring indicator or scoring system indicates that if we have an acting price level, okay, once we're at an acting price level, how is price being affected by that particular level? How is price reacting? And by price, we mean traders. How are the traders, how are the computers, how are the automated systems behaving at that particular level, which can be reflected in our technicals. And we can see right now that we have a very high score, okay, of 91. So on this particular bounce signal, if I go to View Expert Commentary, okay, and if I go back to our bounce signal, you can see that it says we have a bearish reversal probability of 91. Now I can tell you that that's the highest score you're going to see in the chart. Okay, and then it gives us additional rules. What must we do? We must break the low within 3 bars, which we did immediately the next bar. Okay, and then it's going to analyze, and it says, okay, based off of previous cycle movements, based off of our support and resistance, and based off of our Fibonacci, where are our price targets? Okay, so it's going to break down our price targets, and it's going to give those to us automatically. Okay, now we can break it down more and we can look at the specific indicator views, etc., but we won't go into that. Now, the LCI has all of the components that you need for a system, and it's all plugged into MetaStock. So you're going to have your scans. So you can go in and you can run a scan for any particular one of these types of signals, and it's going to give it to you. It's also going to give you what the Fibonacci retracement is. It's also going to give you what the reversal scoring is. Okay, so let's look back. Let's look back at this particular chart and just analyze quickly for the next couple minutes before we get to listen to Mr. Fishback. But let's analyze what our reversal scoring indicator was doing at that particular moment. Okay? Now we can see that we had a lot of buy signals that were very, very successful. Now I can tell you that the LCI system does a very good job. Okay? Now, by looking at the scoring indicator, we can see that on this major reversal that we had in October, and you can look at almost any chart, okay? In the US market, you can almost look at any chart, any stock, and you will see a reversal in October. Almost every one. This is a huge reversal point, okay? And we can look at our LCI scoring, and we had a scoring value of 80. So we had a scoring value of 80 heading into this particular trend, followed by another signal which gave us a scoring of about 60 moving forward. Now, what happened again on this pullback? What was our scoring doing? We had a reversal scoring of 90. What did the market do? It followed that. Okay, we come back here into the sideways movement. We've got our bearish reversal. What did the market do? Pulled back. Okay, so by analyzing this particular system, it's pulling all of the concepts. The scoring indicator pulls everything together, and it says, okay, how is price acting at a particular level? Okay, so you know, there's a lot that goes into it, but it really breaks down into a very systematic, simple approach. It looks complicating, okay? It looks complicated, it looks daunting, but honestly, it is a very simple system to follow. I've done a lot of training videos that you can find online. Now, I'm running out of time here, so if you have any additional questions, you want to speak with me personally, whether it's you know, through email, you can please feel free to give me a shout out, and I'm happy to answer any questions that you have. So go back to that link. Let me let me open this up for you again just in case you missed it. If you have any questions, go to the link and submit those questions in, and I will go through and I'll create a more detailed video that really goes through the system specifically, okay, and really highlights where those particular values are. Okay. Now, Jeff, are you there with me?
I'm still here, yes.
So go ahead and awesome. So I know we're running short on time, but we'll go ahead and we'll turn the time back over to Jeff. Again, if you guys have any questions, reach out to me. I'm happy to answer each individual one, whether it's 100 or whether it's 5. And I'll send that video out and give you a lot more information so that you understand.
Okay, thanks, Logan. Appreciate
All
that.
right, thanks, Jeff.
I'm taking away your screen privileges.
Okay.
Awesome. Again, thanks for talking me into options. That was awesome. Okay. Just making sure that the screen that's coming through is the proper screen to be showing. Again, I wanted to, for those of you that are interested in LCI, it's something that we've decided to include with MetaStock for free. And as long as you have 14, it's a great reason to upgrade to 14 if like the new pattern drawn features and that kind of stuff didn't sell you. This should. LCI is actually a pretty phenomenal system. Looks at a bunch of different stuff, support and resistance, aggregates a score for you, all that kind of good stuff. So we really appreciate Logan making that available for us as part of 14, and it's just something that's included. If you haven't bought your upgrade to MetaStock and you're a MetaStock user, that by itself should be enough. But they've added, one of the things I'm really happy about is lately we've been able to add so many really cool features to the program that just you can't find anywhere else. Let's go through the Summit Action Package details. I'm going to go ahead and give Don Fishback privilege to run over if he wants to, because we're running 6 minutes late or whatever. But he can definitely, since he's the last speaker, he won't throw us off more schedule. Summit Action Pack, again, 3 months of MetaStock RT, 3 months of Zenith, data and news, the Bigelow candle profit systems, the LCI systems that Logan just talked about, and then the bonus pre-filter scans of 2 years of subscription to Task Magazine. You can get that off for $549. It's normally $1,200. You'll want to do it today. We do have operators that are standing by ready to help you, and you can call them at 800-882-3040 if you have specific questions or you want to kind of stay in the webinar room. It seems like our sales chat has been more popular today. So metastock.com/sales chat. The DC version, which is the version of MetaStock that updates every hour, is available as well. That discount on that is $218 or $358. It includes everything but Zenith, and the data link data is included instead. And that's a savings of about $218. And again, I want to kind of say thanks to our sponsor, Stocks and Commodities Magazines. All registrations today will receive a free copy of the magazine. You can take advantage of any service. If you do those bonus offers, you're going to get 2-year subscription. Okay. If you want to do just a free trial, the extended trial for MetaStock, you can go to metastock.com/tradersummit 3-for-1. You can also call our guys again, 800-882-3040. And then the Traders Conference at Snowbird, it's going to be a fantastic event, and you can save $500 if you order it today. metastock.com/snowbird15.